Good afternoon, and thank you for tuning in to our 2025 Mid-Year Update On Point webinar. My name's Matt Staninger, and I'm the Market Research Analyst at Oak Street Funding. I'm excited to be here with Rick Dennen, CEO and founder of Oak Street Funding, and Alicia Chandler, president of Oak Street Funding. Today, we will give a brief review and outlook for the remainder of 2025, discuss market trends, maintaining profitability, opportunities, and more. Thank you both for being here today, Rick and Alicia.
Thank you, Matt.
Thanks for having us.
So we're already at our mid-year update. We're about halfway through 2025 at this point. What are the top two trends you're seeing so far this year?
What I'm seeing, I said a trend, maybe it would be uncertainty, that's going from the interest rates that keep getting pushed out and not being reduced. You've got the uncertainty from tariffs and trade. That is on again, off again, consistently just moving around. And so I think with that uncertainty, it's making it hard for CEOs and executives to make decisions, move forward with their strategies, and, really driving what they want to do.
How about you, Alicia?
So, over the last couple weeks, I've been to a couple of industry conferences, and what I'm seeing is the continued drive for succession and partner buy-ins within the various industries that we serve. And I think one of the top reasons for that is that we've always talked about is the aging demographic and the RIA and CPA, as well as the insurance space that we've continued to see. And, I think that's just not going to let up. It is constantly something that we are asked about. We get phone calls about it all the time, and there's just no stopping it. The other thing I think, which kind of plays into that, is we're seeing continued acquisition for talent. And so a lot of these acquisitions, they can be for a variety of reasons, including, providing holistic services and things that the clients are demanding, but also to backfill roles within the organizations themselves as talent continues to be hard to find, with that younger generation.
Definitely. So some uncertainty in certain areas, but there still is urgency to get a lot of deals done for your various reasons, whether retirement age is coming up, you need to acqui-hire. So deals are still getting done too. Now that's what you've seen so far in 2025. What trends do you expect to continue to see or change in the second half of this year?
I would hope that things start settling down a bit. I was reading a PwC survey last night, as a matter of fact, that said 57% of CEOs are delaying decisions because of the uncertainty. And I just don't think that can continue for that much longer. In that same report, it said 48% of the people expect this uncertainty to continue for 12 months, which means 52% means it's going to continue after that. Some going in, all going as far as saying it's going to the end of the Trump administration. So, I don't think it can last that long, and certainly hope, decision makers are kind of looking beyond that and realizing that some of these changes just don't have that big of an impact to their business model, and they should make decisions and move on.
Very good. So decisions are happening, and we are seeing a lot of news going on with tariffs, trade agreements, really a lot of different things with the new administration coming in. How should business owners respond? I know you've alluded a little bit to that already, Rick, but Alicia, how do you believe the business owners should be responding?
I think there's always going to be change. Disruption is inevitable, and you can't stop your business for every single disruption that's going to come about. So, I think the best thing that we always talk about is planning and executing on your plan, continuing to assess that plan as changes come about. But if you stop, you're going to get behind your competition. So you need to adjust and continue to move forward as those changes are occurring.
Yeah, I think that, with those, if you think back to the pandemic, there was a lot of this uncertainty and people were worried about inventories. I mean, it's almost the same thing with the tariffs. Do we stockpile on certain amount of inventory? Do we need to diversify our vendors? Where are we getting this from? Can we go back and price negotiate from our vendors? Do we onshore? Do we offshore? There's all different types of things you can do. But like Alicia said, you gotta make those decisions. You gotta continue to run your business. That change is going to happen. So I think my opinion is it's a little bit overstated. And, when you talk about, goods being imported, when you get down to truly what these tariffs are going to impact, it might be a certain piece of, the import, like on automobiles. It's the process that was done maybe in Canada or somewhere else in China. It's not the entire cost of the vehicle in most cases. So there's a lot of, nuances about it. And I just don't think that in most cases, not all industries, but in most cases, the impact is going to be huge.
Definitely. There are some comparisons drawn there between the uncertain and volatile times that we saw in 2020 to what we're seeing right now with volatility in 2025. And we saw some businesses shine. We saw some businesses pause. And what would your comments be on how businesses that were able to shine, what they were able to do during those volatile times?
They were able to make decisions. The other thing that does impact some of this is AI, the impact of AI, which is, at the forefront of, everybody's thinking, CEOs, and how that can impact and improve their process, their data, their decision making. So, to me, that ones are going to shine are those that are going to seize the volatility, I always like to say. And it's going to happen, make a decision, move forward. But in these times that are volatile, there's really, really good opportunities of people that are, throwing in the towel, good time to do an acquisition. And I think if you're sitting back doing nothing, that's probably not, waiting for things to settle down. That's absolutely the wrong strategy. I would continue to execute, find those opportunities. And, if rates don't come down for, 3 months later, where we are today in the interest rate cycle, I don't think that's going to have that big of an impact when you compare that to, historical rates. So I still think there's opportunities out there. I think the economy is, there's a plethora of capital certainly out there to make things happen. And I think if people execute on a strategy, continue to revise it, have the data to make good decisions, they're going to be successful.
So we talked about tariffs, trade agreements. Those are very hot in the news. But when we hear about policy changes with the government, what other changes are you seeing that affect borrowers in our spaces?
It's not so much in our space. I will tell you at the bank, one of the biggest concerns we have in any credit that comes in is government spending. You see what Elon Musk and, Doge is doing relative to reevaluating government spending, budgeting, those types of things. Well, if you've got a customer that's from, the government is your customer and they're 70% of your business, I'd have real concerns now. And I would guess that those credits are struggling to find, senior debt, so to speak, to fund those deals. Specifically in our space, in the service industry, all U.S. based. I'm not seeing a ton that would have a big impact on ours.
Yeah, I think, Matt, the one thing that we have briefly touched on that actually took effect June 1st are some of the SBA changes. And I know that that will directly impact some of the borrowers and some of the acquisitions that are going on in our industry right now. There were some changes with the SBA requirements to, I think, make those requirements stricter and have less flexibility on sellers. And so when you're looking at, the acquisition strategy and who your buyer is and the lender that they're using, I think that you're going to have to take a really careful look at the SBA versus conventional lending like Oak Street. I think where it allows the sellers more flexibility to stay on, perhaps to get payments over a longer period of time and just have some more creativity and structure. And so we are seeing a little bit of pickup from that government regulation.
So a lot about government regulations, a lot of changes being done. What would you say to business owners at this point who have either paused on acquisitions or investments in their business due to the current volatility?
I would say if they're pausing, they're going to get behind their competitors. We continue to see I think a lot of acquisition opportunities and people are, the multiples aren't going down. And so as those continue to occur, if you're pausing, you're certainly not going to keep up with your competitors and you're going to be at a disadvantage when they're acquiring the talent, when they're acquiring other services that your clients want. They want those holistic services. That is the top, I think, reason why people are acquiring is to add on, the wills and trust and estate type of information or the trust services, the tax consultation, all those other ancillary services. Those are definitely one of the top reasons for people to acquire these days. And if you're just sitting back and letting everyone else do it, you're, likely to be the next target for an acquisition because you just can't keep up.
Yeah, I don't think that, I think you're spot on there, Alicia, but I hope they're not waiting for rates to drop, back down to the pre-pandemic levels. They're not going to get to that. So, like I said before, if they come down 25 or 50 basis points, is that really the decision point of doing an acquisition or not? And it shouldn't be. And I think people just need to move on with their business and make set their strategy and execute on that.
Right. You alluded to we're not really seeing multiples go down any, and really we're not seeing prices go down. So continues to be a more expensive business of acquiring. And as we get into acquisitions, how do you foresee the market changing, if any, with acquisitions for the next 12 months?
That's a really interesting question because, being in business 22 years, we started seeing the acquisitions on the insurance side. And you're like, well, this can't go on forever. The population is relatively small, $40,000 to $50,000 insurance owners, and it's going to stop. It's going to peak out, and and we've been to several conferences. Marsh Berry, who always tracks the multiples, and John Wepler gets up and he said that the multiples have peaked, and I think he said it for like 6 years in a row. And each year it just inches up a little bit more and a little bit more. So, Alicia said that they're at highs right now. I think it has a lot to do with just the amount of capital that's available to be used for acquisitions. And I don't think that's decreasing in any way, shape, or form.
Yeah, and the one thing I think that has become more prevalent is just the creativity of the deal structures on the acquisitions. We're seeing less upfront and then more tied to the back end of the seller earnout. And specifically what we're seeing is a lot of that tied to organic growth. Organic growth is king. And when you can get the seller aligned, especially sellers that want to sell and stay, that's really proven to be a good strategy on the back end because then everybody wins when there's continued organic growth following the acquisition.
Right. So acquisitions, of course, inorganic growth. We've seen a lot of emerging incumbents into the acquisition space. You mentioned organic growth, though, Alicia. What are some of the options for business owners looking to really organically grow their businesses over the next year?
I think some of the things that I've been seeing in the market relate back to what Rick was talking about with AI. There is a lot of really interesting and creative technology coming out that is going to help the various industries that we work with, specifically advisors, because that's what I saw last week, to become more efficient with their time, which then allows them to go out and seek it to sell. Ways that they can improve their, time taking notes and putting those into the system in their CRM, speeding that up, reducing the menial tasks, becoming more efficient with their marketing. I think
Spending more time with their
spending more time with their customers. Yeah, you're right.
planning and evaluating the plan that's in place.
Yeah. So anything that's going to free them up to be able to get out and actually be with their clients and get those continued referrals, that's going to continue to help them with the organic growth.
And then, I mean, to me, she's 100% right. But people, is always the most important thing. So as we just talked, if data can free good people up to do, more substantive type work, I think that's where the benefit comes in. So It frankly drives me a little bit crazy when people say, well, we're cutting people at this stage of the game to try to cut costs. To me, the human capital game really in almost any company is if you find good talent, you've got to get them hired. And it's that simple. And then if you can use the technology to push those people out more and get a higher percentage of, face time with their clients versus sitting back in the office and doing the minutia, doing the analysis, computers should be able to do all of that. Those are opportunities, I think, to grow organically.
Those are some great ideas there, and this may really allude to the next subject of increased costs. They're prevalent in numerous places. How can business owners combat the rising costs to make sure they're maintaining their profitability?
I'll tip diversification, options, I think are the best things you can do is, if you're going to buy a car, have some options. If you're going to look for different products. I mean, I just think having options will give you the best decision making and levelize, provide the equilibrium in the market a little bit. So, again, you should always be looking to run your business efficiently in reducing those costs. So I'm not a big believer in we're cutting costs 20%. I've never said that in 22 years. We're cutting costs because we need to cut costs, and let's look at everything and cut it 20. That's the manager's job every single day, and the people that run the business, that's their job to do every single day. But finding the right people and putting the right people in the right seats, I think, is really important to just having a really efficient business.
All right, let's pivot out a little bit further. And as we're really looking ahead, where are the biggest opportunities for bankers and lenders to address industry needs coming in the next several years?
We've talked about data. I'm going to throw it out there again. I think bankers can use data in their business. As far your question is very specific as to identifying opportunities. What I would say is here we have a goal to start a new service line, a new lending opportunity to a new market, one a year. We're always looking. People are coming up with different ideas, whether that be distillery lending or energy broker lending or different things that we've done, tried. There's other things that we've looked at to do that we haven't embarked upon. So, I think there'll be, new industries that come out, but, we're always looking for new opportunities, Matt.
I think one of the other opportunities, and it's something that we do today, is just, continue the creativity in thinking through the structures that we see with various industries and just being able to be nimble, quick on our feet and adjust to not only the market, but what our specific industries need, and being able to provide, those options. And I think that will enable us to be a better lender to our clients.
Yeah. I mean, that's a really good point. I mean, the programs that we have today have evolved clearly. The industries that we've lent to have evolved. As the market caps change, so has our products. So have the structures. The alignment is something that we've always focused on since the beginning, making sure the buyer, seller, and, that we are aligned in the transaction. But very good point on the structures have evolved to really mirror market conditions and, what the buyer and seller are trying to accomplish.
Right. Look at the changes in the loan purposes and even the business lines that have gone through the course of the last few years, let alone over the 22-year history. Today happens to be Oak Street's 22nd birthday. Congrats for that, of course. With all the experience the company has, what, in your opinion, is the most exciting aspect in today's market environment for the industries in which we specialize?
For me, what's exciting is we picked a good industry. And as I previously mentioned, it seemed to be somewhat limited We got our capital from the mortgage industry, mortgage companies. So, there's kind of an unlimited market there, much bigger market sizing. So the fact that here we are 22 years later, we're still lending, it was a great choice to get started in. And it continues to serve, the succession planning, and some of the acquisitions that are being done, some of the growth opportunities that are being done. So it's been great to see that expanding into these new industries has been, as good as well. RIA now exceeds our insurance book as far as, dollars outstanding at this point in time. So, picking these cash flow based, non tangible businesses has just really been exciting to see and evolve over a 20-year period.
I think the other thing that I know you've personally been a part of, Rick, is just, helping people to create legacies. We've seen quite a number of clients that have started, maybe they purchased their parents', firm or agency or what have you, and they've been able to aggregate and then sell at the end of the day and just create, I think, a nice legacy for themselves and the business that they've built, and some of them even being able to be involved in that ongoing business. And I know you've personally witnessed that as well.
Yeah, that's a lot of fun to see the success of the customers.
Let's highlight one of those that you've seen over your 22 years. What's been your favorite story or your favorite business growth story of someone you've been able to help get from either a small to a mid-size or mid-size to bigger? What's one story that sticks out to you where Oak Street's really helped out their business?
I think Alicia mentioned one clearly where you see the succession from father to son, and then the growth, whether it's organic or being acquisitive. We've seen several of those. Some of the most exciting, though, are when you get involved in like their first acquisition. And I hate to say it, but, they're not always successful. They haven't figured it out. They don't have process in place. They haven't kind of institutionalized how to integrate the firms. But you see them develop. You see them grow as leaders and as individuals as they figure it out and put it together, and then continue to move on and, just be successful. So, we've gone through the same thing here. We were independent for a long time before the bank bought us 10 years ago, almost 10 years ago now. And so we've had to, fight, kick, and scratch at certain point in times to raise capital, both debt and equity. And, when you fight through those things, it kind of makes you better, makes you a little bit stronger. And so when you see people on the outside doing the same things and surviving and thriving, it makes your job, pretty rewarding at the time. So I would say between that and then, from the people inside the company, seeing the growth and the development that the people have come, Alicia being, with us for 12 years and now being the president of the company and running it day to day, coming in from the outside as a partner from a law firm, the marketing team that's here, the salespeople that are here, the servicers. It's just a lot of consistency and seeing them go through the success that we've had and transition from financial sponsors to strategic. And even now, it's been a fun 22 years.
Great stories there. So let's wrap things up with providing some final comments on the market, some signs to look for, whether they're positive or negative, that those listening should really be aware of.
I'm going to just throw all that out, Matt. Like, listen, you can find information on the internet that's positive or negative every single day. I'm going to go back to, my comment on, seize the volatility. Develop your plan, start executing on it, adjust it every single day, but don't wait around, for something that's going to happen. Like, if they're waiting around for those rates to change, like, you're missing opportunities. And I truly think you are, if you're going to do that, or you're going to wait for all the tariffs to settle out, or you're going to wait for government spending to settle out. Like, it's not going to happen. There's going to always be change. And I think that change is, if you can absorb it, make decisions quickly in your company and in your process, I think you're really going to succeed and thrive.
Yeah, and I agree. At the various industry conferences, no one's stopping. The folks that we met, the folks that we've talked to, and the various vendors and partners that we have, the activity is very frothy. And so I think people they're not sitting on the sidelines, at least those people that we've come across. And so you just need to buckle down, make your strategy, revisit that strategy as needed as things change, and continue to execute throughout the year because your competitor down the street is not stopping.
Thank you both for being here today and sharing your insights to our audience. And thank you to those who tuned in and submitted questions. We appreciate your continued viewership. Stay tuned for more from us here at Oak Street Funding with new content and new guests. Thanks again.